Good morning, good evening, good afternoon, depending on where you are in this world. This is Hejin Lee with a daily update for the S&P 500 index. So remember yesterday I discussed, or maybe the day before, the tendency of price becoming like a needle and a thread, where it goes back and forth along the bottom trend line. So yesterday we marked the likelihood of wave 1 being complete and wave 2. And here is the key. If this is wave 3, we need to see some serious higher highs compared to the 1. We need to go higher than 1 like today, very quickly, if this is wave 3. And a retrace of this wave 1, let me label that. There's wave 2, and we have 3 going on. I'll leave it up here for now, so I don't have to align it all. Okay. So let me put the line on this. There you go. Make it a different color, purple. So this is 1, 2. This is 1 of 3, 2 of 3, and 3 of 3. And I'm sorry, I've got my degree of trend screwed up already. I'll fix it later. 1 of 3, 2 of 3, 3 of 3. And if this is A, B, C, and the C has 1, 2, 3, 4, 5, and the C is complete, then the onset of this white 3, all of this needs to be raised. Okay. This white 3 needs to take place like today, tomorrow, latest Friday. Now, this could also pattern out a triangle. Okay, so it's possible to get A, B, C, D, E and a lower low. If we do get a lower low beyond the low of purple 1, we've got a different count. But I think this channel has been supporting pretty well. But this channel can easily, let me zoom out, become a bear flag. Okay, just like it did here. So you need to be aware of that. It can easily become a bear flag. And if it does become a bear flag, we've got a lower low potential. You need to keep that into your awareness. So let's see how there is a potential for that needle and thread to occur one more time. So in other words, what you're getting is 1, 2, and you'll get 1, 2. That's called a nested 1, 2, where the 1, 2 subwaves of the next wave 3, okay, 3 of white 3, occur right after the higher degree trend 1, 2. So you get a 1, 2, 1, 2. Sometimes I've seen even up to 4 degrees of 1, 2, 1, 2, 1, 2, 1, 2, nested. So that's potential. And that quite often occurs in it's almost like coiling, and then it pops for that 3 of 3 of 3. Maybe that's what's happening here too. For me, I like this cycle chart. The white is a 9-month cycle chart. 10 week is the blue. I'm sorry, 20 weeks is the blue. 10 weeks shown by the yellow, and the 5-week cycles shown by the green. And we know that the green was, midpoint of the green was right here. So now the green is pulling price downwards. So you've got one cycle pulling downwards, and you've got the 10, 20, and the 9-month cycle gaining upward momentum, pulling it upwards. So I still maintain that even if this declines to maybe even a lower low down here, that it'll be cushioned heavily by the 9-month, 20-week, and the 10-week cycles. And the price should swing back up. If not down from here, up from up here. It really doesn't matter. So if you combine this cycle assessment with the Elliott waves, it jives pretty well. I think we've got more upside to go. Even if we just goes down to here, 2,600, let's say. This should still overtake it after it bottoms out. Did it bottom out here? I think so. If it didn't, it might bottom out here. I'm not a perma bull. All I'm saying is that the cycles are far more tolerant of a variation than Elliott waves, because if we get a lower low here, the Elliott wave will have to be changed in count. But the cycles are very good for people who are long-term oriented. They don't mind the twists and turns and squiggles of the price in between. You look for the full cycle like this, okay? And you ride these kind of cycles. We may be in another full cycle onset, as shown by the cycle reset that occurred back around June 13th or so. All right, let's see how the price action works out for today, and talk to you tomorrow. Have a good day.